Hello and welcome to my YouTube channel, The Accounting Educator. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career investor. This video is relevant if you are a student of AAT Level 4 Personal Tax, ACCA F6 UK Taxation, or if you're studying Taxation Unit as part of your undergraduate accounting and finance degree. In this video, I will be covering inheritance tax by using one of the tasks from Osborne Tutor Zone chapter activities. So this 7.2, it's a small activity, but it has some points. So through this task, I can explain you those points. So at this point, if you can take a picture of this question, then you will know which amounts I'm talking about. Okay, let me share my Excel sheet with you and we go from there. Okay, so in this task, as you can see that there is a couple, Patrick and Morag. They've been married for several years. And so first Morag died and she hadn't made any lifetime transfers. So all of this information is relevant when they tell you that this person has not made any lifetime transfers. So that means that they are eligible for entire nil rate band, which is 325,000. So you start with the estate value. So as you can see, the estate value in this case, for Morag is given to us, which is 530,000. So always start with the estate value. And what you do from here is you deduct any exempt transfers. So remember, transfer between spouses, transfer between husband and wife, transfer between civil partners is exempt from inheritance tax. So if you look at the information, they told you that from 530,000, she has transferred 70,000 to each of their child. So which means that 70,000 plus 70,000, that's 140,000. So in other words, minus 70,000 minus 70,000. So the rest, this person has transferred to spouse, to Patrick in this question, of course. And that will be exempt, which is this, minus 140,000. Remember, 70,000 plus 70,000, that's 140,000. So this much has been transferred to spouse. So what's remaining then? So the remaining amount is 140,000. Now remember that this person has not made any lifetime transfers, so which means that the entire 325,000 of the nil rate band is available. But it will be limited to whatever is this amount, just to cover that. So in other words, here it will be 140,000 and okay, so 140,000. So which means that she doesn't have any chargeable to inheritance tax estate value. Another thing you need to notice here, which is what's the unused nil rate band? Which will be the difference between 325,000 minus the used, which is 140,000. So this will be transferred to spouse. So in other words, This is 325,000 minus 140,000, which gives you 185,000. So this will be available to Patrick. So when Patrick passes away, then in addition to Patrick's own nil rate band, this will be available as well. So there is no inheritance tax. There is nothing chargeable to inheritance tax in case of the first person passed away. Okay, Patrick, the estate value is given to us, which is 830,000. Again, exempt transfers. Is there any transfer? Of course, that his partner already died, already passed away. So therefore, exempt, there is no transfer between spouses in this case. Similarly, there is no transfer to charity. Remember, any transfer to charity is exempt transfer as well. Okay, so there is no exempt transfer, but also there is something else, which is residence nil rate payment. And this is eligible on if estate has a house. So in first instance here, there was not any house, but in case of Patrick, if you look at the information, they told us that the estate included a home valued at 300,000. Okay, now how much nil rate band will be available? Resident nil rate band will be available. Now, this will be 175,000 for Patrick, but remember that his spouse did not use this as well, as it was not part of her estate value. So therefore, that normally for any deceased partner, that you can claim that resident nil rate band as well. So 175,000. But it is limited to the value of the house. So if you think about the value of the house, they've given us 300,000, although in total, in this case, it was 350,000 available. But because the value of the house is 300,000, so it will be limited to value of the house, which is 300,000. Okay, so we will deduct that, and also the nil rate band. Now you got to be careful here, because remember, Patrick will have his own nil rate band. And in addition to that, any unused nil rate band from his partner, from his deceased partner, which is 185,000. We already established that there, as you can see. So therefore, in total, the nil rate band is 325,000 plus 185,000. And any remaining amount will be chargeable to inheritance tax. So which is the difference between this. So this minus this minus this, which is 20,000. And remember, the inheritance tax rate on death estate is 40%. So inheritance tax, 40% inheritance tax, which is 20,000 times by 40%. So in other words, it is 40% of that amount. Okay, one more point I want to explain it to you here. Where if a person dies, if a person passes away and they transfer to charity, if they actually transfer more than 10% of the inheritance, in other words, that the amount chargeable to inheritance tax, more than 10% of that, then the inheritance tax rate will be 36% and not 40%. So in another video, in another example, that I can go over a question that this is applicable. But as far as this video is concerned, that this person has not transferred anything to charity. So hopefully that this helped you in terms of how to calculate basic inheritance tax, or in other words, that with the limited amount of information, without complexities, how should you approach a question from inheritance tax, especially for AAT level 4 level, and perhaps to some extent F6 taxation, UK taxation. Thank you very much for listening. I will be back with other videos. Bye for now.